Coming up on Business Incorporated. Egypt's exports to South Korea records a 161% increase in 2022. And Transnet taps private firms to run South African ports and railways. And oil prices fall on demand fears as Fed make or break moment approaches. Hello and welcome to the program. I'm Ladi Williams. First off, let's look at what's happening with the markets at intraday. Starting on the African continent, we see equities there mostly traded in positive territory with the NGX 54,347 points. That's up marginally by 0.04%. Not convincing enough to dictate what will happen at the close, but we see South Africa there, 79,295 points. That's up 0.39%. Flip over to other markets we track. We see Egypt, that's also up at intraday, 0.04%, not a marginal increase, just like the NGX. And we see Kenya there, Nairobi Stock Exchange closed negative on Friday, down 0.29%. And talking about the Nairobi Stock Exchange, let's head on now with our guest right there in Nairobi, Eric Mokaya, founder of Wango Capital. Join us via Zoom. Great to have you.
Great to have you.
So how was the market performance last week? We saw that Friday close, that was down.
Yes, it was definitely down slightly, but for the week it was up slightly. I think this year has been a bit of investors are taking a wait and see approach to the markets because it's a new regime and people are trying to get used to what exactly in terms of taxes, in terms of the various things that they want to do and accomplish, they've set out. So I think that's what mostly investors are doing. So just taking a little bit easy as the year starts. It was a rough year last year. The markets were down significantly. The elections were there. The dollar shortage was a bit of a challenge last year. So it's a bit of a recap here. And also, we usually start the year with very few companies reporting earnings in the first 1 or 2 months. So there's really nothing to say much about let's say like the market for the first 2 months of the year. But next month we have the big banks reporting. All the banks are reporting by the end of next month. So that would be a good time to check out how the markets are really doing and to get a feel of how the economy is progressing ever since this new regime took over last year in August.
And looking at this week, what stocks are on your radar that you think might give some gains this week on the Nairobi Stock Exchange?
For this week, the stock to watch is BAT, the British American Tobacco, the Kenyan subsidiary. They're reporting earnings on Friday. They usually report really nice earnings, and usually they have they are very generous with their dividends. So I think that's one stock everyone is watching in the market. And of course, the other two stocks that people are watching are Centum, where one of the market they're performing a buyback program which started last week. So it will be interesting to see what investors make of that, given that the share price has been hugely undervalued. And then also the third stock that you could definitely want to be checking out is EABL. The parent company Diageo is doing a tender offer where they're offering to buy some of the shares back directly from the investors because they deem it undervalued. So that's one stock you could also watch how the progress is going to be this month and next month. Apart from that, watch out banks, especially the big banks, on how they're reporting. Last year, there was some issues with dollars with a lot of the retailers. They could not be able to get enough dollars. So I think that's one to watch out in terms of how they'll be performing in their Q4 results and their full year results next month. So the big banks, Equity Bank, KCB, and Standard Chartered, these are some of the ones that you're watching very keenly.
What do you think are the risks for 2023, looking at the stocks listed on the Nairobi Stock Exchange?
I'm sorry, you said the risk?
Yeah, the risk. Like, what do you think could stop investors from making gains this year?
I think the biggest unknown is how the new government is going to go about in terms of taxes, they just introduced some new regulations about taxing derivatives, which would mean that you have to keep the derivatives income separate from the normal income, so you can't offset them. And that's the main issues. Like, they have so much unknowns in terms of how they're going to progress in terms of taxes. They say they want to collect more taxes from companies in Kenya. Maybe they want to collect more taxes from investors again. So those are some key issues that you really need to pay attention to. So I think that's why when you look at how the yield curve is going and how the bond results are going, most investors are investing in the short end of the yield curve to be able to so that they can be able to get time to be able to think through some of the things that the government wants to report, wants to do, especially this year. So I think that's the biggest unknown in the Kenyan market this year. Other than that, issues to do with dollars and maybe how the war abroad, the war in Ukraine is progressing and how that impacts the cost of inputs and inflation. Those are the key things to pay attention to as the year progresses.
And I know the Nairobi Exchange is big on day trading. How do you see investors profiting from that this year?
I do not. I'm one of those who are convinced that day trading doesn't work in this market, given the high transaction fees. I mean, the turnaround alone eats up almost all the gains you could have made in terms of day trading. So I don't think it works in this market. That's my proposition.
I'm sure long-term investors would make more gains compared to day traders. All right, thank you so much. That was Eric Mukaya, founder of Wango Capital, giving us details from the Nairobi Stock Exchange. Thank you so much.
Thank you. Bye.
All right, now let's take a look at what's happening in the Middle East. We see sentiment there is it's quite squared today with Abu Dhabi in the UAE there. It's the only loser there, 0.71% down. Dubai, that's 3,463 points, up 0.28%. Other markets we track in the Middle East, talking about Saudi Arabia, that's also in the green, up 0.88%. And we see Qatari there at intraday, down marginally by 0.04%. Let's head on to Europe now. We see European big banks coming under pressure to stop funding oil and gas projects at this time, as we see the economies there looking to fund more green initiatives at this point. Let's bring in Kate Ferguson now. DW Berlin right there. Great to have you, Kate. So give us some context on this story. What European banks are we talking about here?
Sure. Well, over the past few years, there's been a lot of talk in the corporate world about this idea of responsible investing, of backing the companies that are actually doing good things for the planet. At the same time, though, the world's major oil and gas companies are still making massive amounts of money. As we've seen in the past few weeks, Shell, BP and ExxonMobil all posted record profits. And now, while that did have a lot to do with Russia's war in Ukraine and, of course, the resulting rise in energy costs, these companies couldn't operate without funding from big-name banks. And it's these institutions that are increasingly being called out. Now, just last week, in fact, an NGO called Share Action. This is a group, I should say, that manages more than $1.5 trillion in assets. Well, it wrote to the 5 European banks it holds most responsible for funding fossil fuel projects. I imagine you've heard of most of them. We're talking about Barclays in the UK, BNP Paribas, Crédit Agricole and Société Générale in France, and here in Germany, Deutsche Bank. They all received that mail. And that letter contained one specific demand: not to finance any new oil and gas fields this year. Now, whether that demand will actually be met is anybody's guess, but it is an indication that investors are seeing it as their duty to pressure banks to do more to protect the planet.
All right, so if fossil fuel companies are falling out of favor, what are the opportunities for green investment in Europe?
Well, there is a lot being done on the policy level right now to spur climate-friendly investment. The EU recently announced the Green Deal Industrial Plan. Its main aims are to speed up access to green finance and really to simplify regulation. Now, this piece of legislation actually came in response to the US Inflation Act, which European leaders feared would actually encourage European companies to relocate to America to avail of the government's incentives for clean energy. There's also the Green Bond Initiative. These are kind of fixed income securities that are used to support efforts to address climate change, but they still only make up a very small percentage of overall bond issuance. So we're still pretty far away from those big emissions reducing targets.
All right, we'll definitely keep tracking that story. But what are European investors concerned about this week?
So as usual, they'll be looking out for any signal about what could happen with interest rates. Over the weekend, Deutsche Bank's chief Christian Sewing gave some press interviews saying he thought further rate hikes were, quote, absolutely necessary to fight inflation. Now, investors will also be interested to see how German sportswear giant Adidas fares this week after last week's steep drops. There's also a meeting of the Eurogroup finance ministers happening today that will be focused on the energy market. So traders will be keeping an eye on any developments there as well. Finally, we're expecting quarterly economic forecasts for the Eurozone on Wednesday. So there's plenty to think about in the week ahead.
All right, thank you so much. That was Kate Ferguson there, right there, giving us the details from Berlin. Thank you, Kate. Let's move on to the U.S. now. So U.S. stock futures were flat today as traders tried to regain their footing following the S&P 500 and NASDAQ Composite worst weekly performance in nearly 2 months. If you look behind me there, we see the Dow Jones Industrial Average Futures. That's trading down 0.06%. The S&P 500 marginally up 0.03%. Still looking for direction right there. And we see the NASDAQ, the only convincing one at this moment, that's up 0.25%. All three major indexes ended the week on a downturn. The Dow ended the week down about 0.17%. S&P 500 fell 1.11%, while the tech-heavy NASDAQ, that slid 2.41% last week, marking their biggest weekly losses since December. Moving on to Asia now, we see stocks in Asia Pacific fell today as investors look ahead to a week of crucial economic data releases, including the U.S. Consumer Price Index that will determine the Federal Reserve's path forward. We see on the Nikkei that's down 0.88%, Shanghai Composite up 0.72%, while the HSI that's down 0.12%. A flip over to other markets we track in Asia, we see it's also negative sentiment with the Kospi, that's down 0.69% closing. The markets remain quite volatile there. While the yield on the 10-year Japanese government bond, that stood at 0.5%, hovering around the BOJ's upper ceiling of its tolerance range. In South Korea, we see the markets there ending up marginally, ending the day down in those markets, but we are expecting more volatility with those markets going forward. Let's take a look at what's happening with oil now. We see oil prices slumped as investors focus on short-term demand concerns ahead of key U.S. inflation data. See, Brent crude futures fell $1.15, about $85.24 a barrel after 2.2% gain on Friday. U.S. WTI crude, that was down $1.12 at $78.60 after a 2.1% gain in the previous session. The U.S. Federal Reserve has been raising interest rates to rein in inflation, leading to concerns that the move would slow economic activity and demand for oil. Both the Brent and WTI contracts rose more than 8% last week, buoyed by optimism over demand recovery in China after COVID curbs were scrapped in December. So we're seeing optimism right there in the oil market. Let's take a look at what's happening with metals now. Gold prices edged lower today on a firmer dollar as investors squared positions before U.S. inflation data could influence the Federal Reserve's rate hike roadmap. Spot gold was down about 0.3% at $1,858 per ounce. Gold futures eased 0.26% to $1,869.60 per ounce. The bullion is often seen as an inflation hedge, but the opportunity cost of holding it is higher when interest rates are raised to combat inflation. The dollar index edged up 0.1%. Stronger greenback makes dollar priced bullion a less attractive bet for overseas buyers. The benchmark 10-year note yields hovered near their highest level since January 6. So a lot still happening in the commodities market. We're looking out for a lot of volatility as the Fed is going to look at what's happening with the CPI, if they're going to raise rates more or maybe some kind of pivot at some point in 2023. All right, we'll take a break now. When we come back, we'll be looking at international payments with the rise of dollar virtual cards in Nigeria. That's our next conversation. Just stay with us. Welcome back. Still watching Business Incorporated live on Channels Television. Now to our next conversation. Following last year's suspension of virtual dollar card service by major fintechs, buying from international stores has become very difficult for many Nigerians. Problem was further compounded recently after more Nigerian banks suspended international transactions on Naira cards. It's Nigeria's forex scarcity, and these scarcity crisis is still ongoing at this point. Join me now is Favor CEO Payday. Join me via Zoom. Great to have you on the show.
Thanks for having me. Thank you.
So it looks like the dollar has become quite a scarce currency for international payments in these parts. And I'm wondering how you fintech still, issuing virtual cards, how are you managing with the scarcity?
So Payday is an American company. So what we do is we issue our users real American bank accounts and real American debit cards. So we give you an American account, you get paid in USD, and you basically have a card to spend your USD. So that's pretty much how we navigate around this.
And obviously, looking at how that's going forward in Nigeria now, we have this whole dollar scarcity going on. The rates, quite different, from what we have. We have two markets. So that definitely impacts, how, you fintechs actually work with the virtual card. So how are you able to, navigate all of that uncertainty?
So first, these cards are like real USD cards pegged to a US bank. So let's say you live in Nigeria, you want to make payments and you don't have dollars, right? You can just put your Naira on the Pay platform and then use our cards. Our rates are really fair, like pretty much the cheapest in the market.
And obviously, there must be some kind of security risk with virtual dollar cards, because at the end of the day, you don't have a physical copy of it. It's right there on the internet. We have a lot of cybersecurity risk in 2023, even in 2022 with the Russia-Ukraine war. So how do you keep this virtual card safe?
Now, the irony is that virtual cards are safer than physical cards, because you could basically step out and lose your plastic card, right? And then you have to call your bank, hey, my card is missing, lucky for me, and then they will air you. They won't even call you back. It's a whole risk. But like for virtual cards, it's on your device, right? You lose your phone or you lose your, you feel like you've been compromised. All you need to do is go to the app and then lock the card. It's like straightforward, just one step. Lock the card, unlock the card. So I feel like it's way safer than using plastic cards.
Quite interesting. Let's look at the app stores now. I know we have Google App Store, we have the iOS, but I've tried to use the virtual cards, and I see it's harder to use it on iOS, but it works on Google. So there's some app stores that don't allow virtual cards. There's some merchants that don't allow virtual cards. Why is that? And how do you guys work around that?
Okay, so this is like the backstory. So Apple is an American company, and they have incorporations in different places, and they also have customers around the world. Now there's Apple US, there's Apple Europe, there's Apple Nigeria, there's Apple everywhere. Now they basically peg your local currency to your payment type or your payment card, right? So basically, if you live in Nigeria and you want to make payments to Apple, you should pay Apple Nigeria, you should pay with a Nigerian card. So if you try to use an American card to make that Apple payment, to decline. The reason they do all of these different kinds of payments, they can do parity. So I live in America, I can easily pay $9.99 per month for Apple, but they want to give a discount to people who live in Nigeria to get them to pay $1.5 or $2.5 a month, right? So if they let you do mix up dollars and Naira, it's going to get really confusing. So they basically peg your local currency, Naira, to your account. So now we issue real American cards, and if you try to add those cards to the Apple Store just like that, it won't work. So the first thing to do is to migrate your account to a US account, switch your location or your type of account to Apple US, and then you can put the US card for it to work. That's like the simple way around it.
Well, quite interesting, and obviously it's something that's beginning to grow on people now. Talking about the virtual cards, where do you see this segment in, say, 5 years?
So virtual cards are still very new. I feel like there's a lot of potential. It's a crazy thing. So basically, like I said, you have the card right on your phone, and you can turn it off and on whenever you feel like you've been compromised. You can also create new cards, suspend old cards, and then you can also add these cards to your Apple Pay or Google Pay, and then you can basically pay for trains or do tap and pay whenever you go shop, Walmart or wherever you go to. So I feel like it's the future of payment, to be honest. You don't worry about losing your plastic cards or renewing the cards, or everything's on your device. Everything's within your power. You can basically switch off a card or create a new card, or you know what I mean? And then there's this idea of creating temporary cards. Let's say you want to shop on, say, Fashion Nova or somewhere, and you don't trust the site. You can create a disposable card, and then it's a one-time card. You just pay pay for it once. And let's say you have a babe and you want to like give her money or just want to do something nice for friends. You want to just give them a card that works one time. Create a card and make it disposable and then give it to them and say, hey, nice thing I'm doing for you today. They'll spend and the card is gone. So there's a whole lot you could do with virtual cards. It's a new technology. It is very exciting. So I feel like the prospect of virtual cards are like really, really cool.
So that means Valentine, that's tomorrow. You could just gift a virtual card to your. Very interesting. Thank you so much, Favor Ori, CEO Payday. It was great having your perspective today. Thank you.
So much, everyone.
All right, so we're talking virtual cards there and see how it's growing right here in Nigeria. Now, moving on to other stories, see Egypt's exports to Korea recorded an increase of 161% in 2022 year-on-year. It's reached an all-time high of $1.69 billion. That's according to the Cairo office of Korea Trade Investment Promotion Agency. According to the data there, Egypt's exports to Korea marked a $220 million surplus in 2022 from $1 billion trade deficit in 2021. Natural gas and petroleum products for Egypt's exports to South Korea. And Egypt's exported to Korea about $810 million worth of natural gas and $760 million worth of petroleum product naphtha, marking a 705% and 107% increase, respectively, in 2022 from 2021. And Transnet, which owns and runs South Africa's port and freight rail network, is increasingly turning to private partners to help expand and improve its operations, which is a key driver of the nation's economy. The state-owned company is exploring the option of creating a rolling stock leasing firm that would enable private entities to use its rail network and plans to outsource the operation of a planned dry bulk terminal at Richards Bay on the East Coast. Transnet has already begun looking for private operators for a liquefied natural gas terminal at Richards Bay and for a new port and rail line at Bogubai in Northern Cape. And the Chief Aggregating Officer of Mobile Money and Bank Agents in Nigeria, Mr. Hussein Olarawaju, has been speaking on the reason for high charges by operators. Mr. Olarawaju, who was on Business Morning, assures that the association has formed a task force to curb the excesses of some of its members. Do take a listen.
As regards to the high rate of charges the POS agents are charging, we as an association have gone against it and we have warned our members to desist from that. However, the reality is these cash are not readily available. As we used to have the market woman, the big merchant who have access to cash, before now, they give out those cash and you transfer normal. But now, then, which is the market people, the traders are also selling the cash. For 5,000 naira, I think I pay up to 2,000 naira to access 5,000 naira. It's crazy, but it's the reality. And we are trying to use task force joint with security operative to, curb the excesses of agents that are doing such. We are pleading, and we've been talking with the CBN. Categorize, the policy has some amendment that needs to be done. Agents are not taken care of. They are just treated like normal Nigerians with no special treatment. And they don't have access to cash like is expected to be. There are many banks, and they should categorize agents so that at least if there is a limit to say agent has access to 300,000 per day, and then give individual Nigerian at least 2,000 or 5,000, believe is going to ease the burden. And this issue of charging high will reduce drastically.
And the Economic and Financial Crimes Commission is asking Nigerians to be at alert against fraudulent activities observed by individuals seeking to compromise their SIM cards. Digital transformation expert Jude Ozinegbe, who was also in Business Morning, shares some tips on how to stay safe.
Are taking advantage of this, calling Nigerians and telling them that the network operator wants to change their SIM card from 4G to 5G and send them a code and tells them to accept or click on that code, and with that their SIM card can be upgraded to 5G. What we'll say is no network operator that we know would call users and tell them to accept a code or whatsoever. So the rule of thumb is to be wary of such calls. So the calls are generated from nefarious actors, and behind wherever they're making those calls are connected systems and softwares and all of that. Those codes have features embedded in it. So these features are like softwares that can take control of your devices. When you click on those codes, you've given access to these bad players to come into your device. The moment they are able to do that, perhaps you may notice glitters on your device. They may have maybe network disruption, service may go off and all of that. They've gained access into the device. So the best thing to do, first of all, is not to open the window at all. Don't click on a code you're not sure of the source. Don't install a software you're not sure of the source.
Yeah, so it's time to stay safe and be on alert with all those payment channels there, because cybersecurity is a big risk and you don't want to lose your money to any of that. All right, thank you so much. That's the show today. Thank you for watching. I'm Ladi Williams. I'll see you tomorrow. Bye for now.